Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. If you are struggling with break and retest trading or looking for a strategy that actually works, then this is the only break and retest strategy you will ever need. Now, traders, in this video, we're just going to be diving into one of the most powerful price action trading strategies used by professional traders worldwide. Okay, so whether you trade forex, stocks, or crypto, this strategy can be a game changer for your trading journey. Before we get started, make sure to smash that like button and subscribe to the channel if you want more high quality trading content. All right, let's just get into it. Now, the break and retest strategy is a simple yet highly effective way to enter high probability trades. Okay, it works by identifying key levels of support and resistance. Remember, we've talked about support and resistance before in previous videos. Support and resistance levels are areas where price got rejected, areas where price finds difficult to break through. Okay, it doesn't mean that those areas cannot be broken. No, that's not what it means. What it means is that price usually finds it difficult to break through those levels. We usually have rejections around those levels. You can see this was a resistance, multiple rejection here, here again. You can see we have a resistance around here, we have a resistance around here. You can see in as much as this was a resistance, it was eventually broken, but basically price finds it hard to pass through that level at once. Okay, while supports are usually below price. Okay, supports are at the bottom while resistance are on top. All right, so here's why this strategy is so powerful. It helps confirm market direction, it filters out false breakouts, and it provides clear entry points. All right, additionally, it works on all time frames. So let's just break it down step by step so you can start applying this strategy immediately. Now, before entering a trade, you need to make sure you are dealing with a valid setup. All right, here's what to look out for. I already said you should identify your key levels, right? You start by making strong support on resistance zones, right? Mark out these zones on your chart. I'm going to recommend doing that on higher time frames, at least 4 hours or daily, right? You mark out those key levels on your chart. These should be areas where price has previously reacted at least 2 times. Okay, preferably multiple times beyond 2 times, right? Then you wait for a breakout. For example, you can see that this was a resistance zone and we had a breakout from this zone. Right now, after the breakout happens, okay, whether it's a breakout to the upside from a resistance or a breakout to the downside, from a support, ensure that you have a strong momentum candle. You can see that this candle was a strong momentum candle. You can see the rejection weak, right? You can see this was a rejection candle. This shows that there was significant rejection from here. Sellers pushed the price all the way down to this point and the buyers regained control, pushing the price back above this resistance. So this was a rejection candle and then it broke out from this resistance. All right, so apart from, or rather in addition to the breakouts, ensure that you always watch out for a retest. Okay, after breaking through the level, price should pull back to the same zone like what we see happen here. After the breakout, you can see that we had price pull back, and after that pullback, right, then you look for a confirmation signal, okay, to enter the trade. All right, so that is how this strategy works basically. All right, now that we have identified a strong break and retest setup, let us talk about how to enter and exit trades properly. All right, for your entry, once price retests the broken level, in this example, this is the broken level, right? Once price retests the broken level, look for confirmation signals like a rejection candle. Now we can see that another rejection candle is forming. This particular candle right now, it seems to be a rejection candle that is forming. The candle has not yet closed, so we cannot exactly conclude yet. Okay, but once the candle closes, we're going to confirm if it actually is a rejection candle. But so far so good, it looks like a rejection candle, right? So after the breakout and the retest has happened, ensure that you get a confirmation signal. Okay, it could be a rejection candle, it could be a bullish or bearish engulfing pattern. All right, it could be, any candlestick pattern at all that validates that continuation after the breakout and retest. All right, then once you have confirmed your entry, you can enter if it's a breakout, if it's a bullish breakout, you can enter a buy trade. If it's a bearish breakout, you can enter a sell trade in the direction of the breakout. All right, then now with respect to your stop loss and take profits, you place your stop loss a few pips below the retest level. That is for a buy trade. And even if it's a sell trade, you place your stop loss a few pips above the retest level. All right, this keeps your risk minimal. Ensure that you always make use of stop losses. All right, stop losses and take profits, they are very important. Okay, then concerning the take profits, you can aim for 1:2 or 1:3 risk to reward ratio by targeting the next major resistance for a buy or the next major support for a sell. All right, so in this case, if we had entered a buy trade maybe around here, perhaps we would have considered, let's say, well, for the fact that we are still waiting for this candle to form completely, yeah, because of course you have to wait for the candle, the confirmation candle, to form completely. So considering the fact that we are still waiting for the candle to form completely, we may not exactly know what the risk to reward ratio is going to be yet, if we are going to be taking our profit at this resistance, right? Because ideally, the risk to reward ratio is going to be calculated from your entry point. Okay, so assuming the candle closes here and then we are entering, let's say, around here. All right, let's say we have a confirmation that this is a bullish candle, and then let's say we enter a buy trade around here. Then our stop loss, ideally the stop loss position should be below the breakout points. That one is fixed, right? Some pips below the breakout. Then for the take profit, in order to have a good risk to reward ratio, let's just zoom out a bit. In order to have a good risk to reward ratio, we might have to be targeting the next resistance, right? We might have to be targeting the next resistance, because if we are to use this resistance, we are not going to have a good risk to reward ratio, because this is going to be about risking about 50 pips. Yeah, risking about 50 pips to make about 43 pips. That is a bad one. So our target should be at least 100 pips, right? So this is going to be the next resistance. So if we enter around here, set stop loss below here, this is going to be a good place to exit our buy trade. But it doesn't mean that if you find a rejection happening around here that you should remain in the buy trade. No. Once price gets to this resistance level, just keep watch. Okay, there could be a breakout if the bullish momentum is strong. All right, there could actually be a breakout if the bullish momentum is strong. On the other hand, if it happens that sellers regain control, then you can just take your stop loss to break even. All right, you adjust your stop loss once the price gets to this resistance. You adjust your stop loss to your entry point or a few pips above your entry point, while you wait for the next course of action, right? It could be that a breakout will happen and then you will have price rally to the next resistance. Okay, but just to be on the safer side, once price has gotten to this first resistance, just shift your stop loss to break even. Okay, then you wait for the next course of action. All right, now many traders fail with this strategy because of common mistakes, and here's what to avoid. The first thing to avoid is entering too early. All right, do not rush. Always wait for the price to retest and give a confirmation signal. Okay, secondly, do not ignore market conditions. Avoid trading during low volume sessions or choppy markets. Okay, and finally, do not make the mistake of not using stop losses. All right, do not make that mistake for any reason. The mistake of not using stop losses. Okay, always protect your capital by placing a stop loss in every trade. Okay, if you avoid these mistakes, your break and retest trades will significantly improve. All right, now let us just jump. Let's just talk a little bit about risk management, just very briefly. Now, in as much as you have to have a good strategy to be successful in trading, risk management is very necessary. Okay, Imagine if you have a very profitable strategy, but you do not know how to manage your risk. Do you know that at the end of the day, you are still going to be losing? Because imagine there is no strategy that guarantees 100% profit. So imagine that you have been making some profits because of that good strategy, but then the single time that you did not make a profit, just one time that you made a loss because you couldn't manage your risk effectively, just that one time is sufficient enough to blow your account. So that is the reason why it's always good to employ proper risk management. I just need to emphasize that before we round up this video. Okay, so ensure that you always use your stop losses, ensure that you always use good risk to reward ratios, ensure that you always get confirmations before entering your trades. All right, so if you found this video helpful, hit that like button and subscribe for more powerful trading strategies. Let me know in the comments if you've tried this strategy before and how it worked for you. Okay, turn on notifications so you don't miss out on future uploads. In the meantime, thank you for watching, and I hope to see you in the next video. Happy trading.